Hey everybody, it's Pete. Excuse me. Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. We got a bunch of stock picks we're going to talk about today. We're going to talk about the chaos in the market right now. I've gotten a lot of feedback from quite a few people buying stocks at the wrong time, selling stocks at the wrong time, feeling like they're all over the place right now, absolutely losing your confidence in a heartbeat. We're going to talk about how to fix that today. We're going to get a little bit into sector rotation. We're going to get a little bit into hedging today, which is a different type of strategy as the market's bouncing back and forth. We have a bunch of stuff to talk about. I also want to talk just briefly when we come back that I was at a mastermind group the last couple of days. And if you have not been involved in a mastermind community, it is an amazing, amazing way to really just start to lift your thinking and start to see things in a different way where you're like, no, I'm not going to settle for that. I want to be up here, and how to go after it and get it. If I can give you one kind of insight into the things that we talked about over the last 2 days, is successful people take massive action quickly. And it's actually, if you've ever read Think and Grow Rich, I talk about it all the time. I have it on my bookshelf in the back. One of the biggest things that they talk about, and Andrew Carnegie supposedly said in the book, that once you have all the information, the only way to be successful is to make a quick decision. You can't overthink it. You have to actually get to the point where you're like, I have everything I need right now, and this is the first action step that I'm going to take, which could even be an action step to do nothing. Saying no is a big thing with successful people as well, which kind of takes us into the market. And I'm actually going to go through line by line the email that I sent out this morning, because buying and selling stocks is not the easiest thing to be doing right now. There's pockets of opportunity, and there's different ways to interact with the stock market right now, and we're going to get into that. So stick around. We're going to be back in just 1 second. Okay, so thanks so much for being with me here today. Obviously, everything we talk about is for informational purposes, educational purposes. It's up to you to make that final decision. So before we segue right into which stocks I'm looking to buy this week, the best opportunities after yesterday's crazy day with the CPI number hitting the market at 8:30 in the morning, and then a vicious rally back to the upside right after the market opened, and then a big move down to the down in the last 3 hours of the day yesterday. If your head's on a spinning wheel right now and you're not sure what's going on and you're losing your confidence, that's why we're here together, to maintain your sanity as a stock trader and make sure that you never get to the point where you lose doubt. You do not want to doubt what you can do. You want to have absolute confidence, assuming that you have an edge in the first place. And hopefully by watching these videos, we're putting you in the right direction, where order flow and tape reading have now kind of moved up the list, where things become easier. This is very important for me to frame what's going on in the market right now, because just buying and selling stocks the way it was much easier when the market was just going straight up. And if you're a regular viewer of the channel, you know we've been talking about it for a while, that the tape changed, the reason the tape changed. But you know what's really exciting? If you could think about why the market was going up from the bottom of the pandemic and was just going up kind of like every day, it felt like every day, and there's just this vicious move to the upside. Quantitative easing is what we might call the market had a bid underneath it. And once that bid is there, no matter how many sellers came in, there's always a bid there. And it's just this kind of slow grinding move to the upside where it kind of felt it's going too far. When is it going to pull back? That market is not going to pull back as long as that bid is there. But that bid is gone now. But, and this is super exciting, we've actually had this conversation quite a bit lately, is, are there other opportunities similar to quantitative easing where a stock has a constant bid underneath it? And how do we spot that? There is. And there's two stocks right now that have announced this same kind of move. And we had a conversation last week in the boot camp where we were talking about this pre-market in the game plan meeting that we have for the members of the boot camp and order flow, that somebody mentioned that, but the stock reported earnings that were not good. We said, yeah, but they also said this, which is why we're watching that stock right now and expect the stock to rally until that news changes. So how's that for teasing it a little bit? So I'm going to get to those two stocks in a second, because they were easy buying opportunities based on that news. I never want to say easy money-making opportunities, because you want to be fully transparent here, right? There's wins, there's losses. But this is a situation for buying stocks that you absolutely need to pay attention to, because the stock, one of them, did not report good earnings, but it's up $6 since then, only from last week. And it's only a $50 stock. So we're going to get to that in a second. But I want to show you the email from this morning. It's not AFRM. It's not AFRM. Okay. So here's today's CPI numbers hit the market yesterday, and the chaos unloaded. Okay. An unexpected rally after the open, followed by a hard bearish activity into the close. And I think what I'm talking about here is this, with the way the market and the futures were. They were down here pre-market, and then this happened early yesterday. And if you were trading yesterday morning and expected the market to trade lower, it should have, but it didn't. So if that early selling at 8:30 had the futures down quite a bit, you had every reason in the world to be going into the market yesterday saying, okay, I'm going to hold off on buying stocks until I see what happens and let the market open, especially if you're on the day trading side of things. And then you have this really fast, hard move to the upside, and you're like, what the heck just happened? Which is going to take me into what I'm talking about right now and how to trade the current market. Okay. So why did the morning price action, let me pull it over. Why did the morning price action happen? Why did the rally happen? If the market was simply going to decline after the release of the inflation number. So why did we rally if we were going to decline as we did in the afternoon anyway? And here's the reasons why. Because everyone is trying to guess what the FOMC action in March is going to do. Flip on any channel on a website and you'll get 10 different opinions about the next Fed meeting. And this is something that is key. If you want long-term conviction in looking at the market, the probably the number one context that you need for buying and selling stocks is, as long as everybody has the same opinion, you should be in there with conviction. And that's when order flow is obvious. But what's going on right now, since quantitative easing ended, the big question right now that everybody's on both sides of the market, which we're about to explain in a heartbeat, is there is not conviction. There's a lot of indecision, and the market hates indecision. And we just saw that in the SPY chart that we just looked at on the daily chart. We had a bullish gap followed by a bearish gap, a bullish gap followed by a bearish gap, and closing near the low. And now we're actually set to open up again lower this morning. I promise all of this is lining up to a bunch of ideas that I'm going to talk about today, both on buying those stocks and even considering selling short stocks and hedging as well. Okay, so moving on over, guessing equals indecision. So anytime you feel like there's indecision in the market, take a step back. That's the most difficult time. The market does not like indecision, and quite honestly, neither does your trading account. It's widely expected that the raise in rates is happening. Now it's a question of how much. This is where the question. So that's the first question. The first question is how much, okay? We're assuming it's happening in March. Now the question is it 25 basis points, 50 basis points? That's only one side of the argument, which is where the indecision is coming from, okay? All right, that's the common sense argument. The other side of the camp is the economy is fine, and all of the problems that we've had with the CPI number and the inflation number is because supply chains were messed up. That's the argument on the other side of things. The economy's fine. It's not really explosive CPI. It's the supply chains that were the issue. Once the world starts getting back to normal, accepted levels, and the world will end up being okay. And the Fed doesn't need to act under this condition. So what's going on here is these two strong opinions are battling it out right now that no, the economy is so overheated. Job numbers were amazing, through the roof. We have to raise interest rates to cool it off. The other side of it is no, all of those numbers are distorted. And once supply chains and the market gets back to normal, that inflation number is going to get back to normal, and there's no reason to raise interest rates. Don't touch anything, leave it alone. A lot of smart people are butting heads right now on that, and that's why there's so much indecision in the market. If I had to give a call on the market right now, there's not a question in my mind. I would be neutral to bearish. I am not stronger on the side. It's kind of like if you could see 1 to 10, I'm probably like at a 4.5 right now. If 6 through 10 was bullish and the other side of the market, 1 through 5 is bearish, I'm probably at a 4.5, where I'm not strongly bearish, but I'm not leaning on the bullish side either. There are some opportunities to buy stocks, though. So I want to separate the big picture of the market to the individual ideas that we're going to be looking at, okay? All right, so head spinning, you're not alone, right? So what does a smart trader do? Stick with hot sectors, which we've had. Energy stocks have been hot sectors. We're going to work our way up that list a little bit. and only A plus trades and shift into momentum exits. Now, what I just talked about right there in that one sentence is critical. We are not in the market environment right now where you can afford to make a mistake, take a so-so trade, buy a bottom like PayPal. I got so many people asking me, is it okay to buy PayPal? It was 300. Now it's 120 or whatever the number is right now. It's still going down. This is not the market where the market's just going to be like, yeah, everything goes up and any mistake I make as soon as I buy a stock is going to be fixed by the market. We are not in that market right now. So now we're talking about the types of setups before you buy a stock. And this is the most important part, the exit of those types of setups. We are more into what we call momentum type trading, where we're booking the call and getting out. We're booking the call and getting out. So we make the trade, look for it to move in our favor. And as soon as we see signs of it slowing down, we're taking the cash and running. That's the kind of market that we're in right now, because what's happening is you're getting these big moves in your favor, and then it's slowly melting back down to where you got in, and you had a pretty good idea. There's certain conditions where everything lines up. We're not in that condition right now. So you need to recognize stop and go traffic. Is it raining or is it wide open? We're kind of in stop and go traffic, best case scenario right now, which means that I'm a little bit more geared towards cash flow as opposed to building new positions right now. Okay, so this is the big thing right now. We've shifted into momentum exits. So keep that in mind. That's what I'm looking for. Long-term plays are less obvious right now. Take the winner, take the money and run. For the 18 months, a rising tide lifted all boats. That ship has sailed. I am telling you right now, if you have not recognized that, wake up. We're not in that market anymore. In the current market, small mistakes, which we call unplanned trades. So remember, everything that we talk about here every single morning, I highly, strongly, with conviction, would love to see you start to script out the day, script out the week, and say, if this happens, this is the only thing I'm looking for. If it happens, great. I'm going to take action because it's a part of my edge. If you script it out and it does not unfold, you have to be smart and say, I'm stepping back because what I wanted to happen, what I was looking to see happen, did not unfold. Those little decisions where if you decide to take action anyway and it did not match your criteria, those little tiny decisions will cost you a small fortune. That's on you. That's not on the market, but you have to go out of your way before the market opens to make decisions of what the market needs to look like and then what you plan to do. So I'm just going to finish this up and then we'll get into some ideas, okay? All right, if you understand hedging, that's a good play right now, shorting or getting long inverse ETFs. I saw a couple of people mention the inverse ETFs and buying those. So if you don't know what the inverse ETFs are, when the market goes up, when the market goes down, inverse ETFs go up. So a lot of people are not comfortable with shorting, meaning selling up here and buying it back down here. So betting on a stock going down or the market going down. So you could buy a put if you want, but there's time to expiration. There's a whole bunch of other things going on in the option there. Or you could buy an inverse ETF where if the market goes down, the inverse ETF goes up. So you're comfortable with being buyer even though the market's going down. So those inverse ones are, we're spending a lot of time talking about them, quite honestly, inside of our Discord community because it's quite easy. It's easier to understand buying and getting long, even though the market's going down. So if you want to do a little research on your own, just look up inverse ETFs. And I saw a couple of people posted a couple of them in there, so you can scroll through the chat. So the other thing I want to point out is actually this. Let me just pull this up on the screen for you. Hedging. We just talked about hedging a little bit, right? And hedging basically is being on both sides of the market. Thank you for that, Simon. Appreciate that. So hedging basically means you're basically buying and selling stocks short at the same time. So you're kind of working both sides of the market as the market's going back and forth. And we're actually kind of in a good environment to do that right now, because if we go over to the bigger picture of the market and we pull this up here, you can see that we went into a box for a week. We went into a box for 2 weeks. And that's the kind of market condition that really is good, because you're not expecting a big blast off in one direction or the other. But here's the thing I want to get across, which is critically important. So if I walk you through, I'll just give you this. You can take a screenshot of this. So I'm going to give you a heads up. It's coming up now, okay? So when we have stocks on both sides of the market, BOF means bullish order flow. So these are the ideas of stocks that we're looking to buy. But then we also have stocks on the other side of the market, stocks we're looking to short sell. So bearish order flow, bullish order flow, bearish order flow on short ideas. So what's important about that is if you're understanding hedging the market where you're looking to buy strong stocks and short sell weak stocks. Again, you don't want to sell short strong stocks. That's a silly play. We've seen some of these stocks that were weaker that have exploded. Some of the basic material stocks, which you're going to talk about buying today, NUE, Alcoa, just to name a few. It's critical. So this is an important part. If you learn hedging strategies, you want to buy strong stocks and short sell weak stocks. Critical. I know that sounds obvious, but too many people try and short strong stocks saying, if I get the top, it's going to fall a mile. That's not the way it works. And you could use NUE as an example. If you're looking to short the stock that is taking off, you're gonna get your head handed to you. You should be looking to buy this stock versus a stock like 3M, which already has bearish order flow. You'd be selling short this stock. So here's the thing that I want to point out. If hedging is new to you, whether it's buying inverse ETFs or short selling stocks, I put that video that I just showed you, I put the link for that hedging video in the description below this video. So after this video is done, make sure you click through and watch that video because it's maybe 9 minutes, but I walk you through position sizing on hedging. I walk you through how to find the ideas for hedging. It's pretty important. So now we're going to work our way over into those two stocks that I mentioned before. So remember, quantitative easing had this big bid underneath the market, and basically it was very challenging for it to go down, and it just kind of kept melting higher. So what I want to talk about now, which is a stock buyback. Now, the way a stock buyback works is a company goes out and announces, we really believe that at these price levels, our stock is awesome based on our future cash flow. So what they need to do is they go back out to the market, and here's some trader lingo for you. They need to be a natural buyer of that stock. So what that means is they can't go out and buy stock that's advertised. They can only sit on the bid. So remember what we just said, there's a bid underneath that market. And for example, one of them announced a $750 million stock buyback for their company. So now they are out in the market just advertising to buy stock. And as sellers come in, they're sitting there. Sellers come in, they're sitting there. So that stock is just going to kind of floating because there's that constant bid under the market. So what's kind of cool is we've had a lot of people saying, gosh, it was so easy to buy stocks when quantitative easing was there. Now they're having that taper tantrum where they're decreasing the amount of assets that they're buying. They're lightening up the balance sheet, the Fed I'm talking about. But there's opportunities to do the same thing in individual stocks if you know what to look for. So one of those stocks is Penn National Gaming. And the earnings came out over here, and you can see that the earnings were not good. It opened up here, came all the way back down. Let me actually zoom that out for you. You can actually see how we're working this box, right? So this was the day when somebody in the room was like, I don't understand. Earnings weren't great. What are you talking about? So earnings, next day, we traded low for the next 3 days. But look what's going on now. Sellers came in, and the bid is still working underneath that market. So there's a $750 million stock buyback. Twitter, I believe somebody said Twitter before. They were 100% correct. It was Andrew. Yep. Twitter is the same thing. Twitter announced an even bigger stock buyback. Now, I want to be clear about this. The same way with quantitative easing, stocks they still went up and down, right? It wasn't just stock buyback, quantitative easing, and these things go straight to the moon. That's not what a trading is. That's not what a real trader is. Remember, if you're watching these videos and you're joining me on these videos, which I want you to know how much I appreciate it because I really get pumped to do these. What we're talking about here is we're talking about learning how to trade. We're not talking about guaranteed stuff. We're not talking about stuff that just goes straight up every day. We're not talking about just being a better chart reader. We're talking about how to allocate real world buying power, how to get the right share size, how to work those positions, understanding the right profit targets, the right objectives to shoot for. That's what we're talking about here. We're not talking about anything that is for sure that's definitely going to happen. We're setting up probabilities based on an edge. So we've seen Penn National Gaming rally $6 since that stock buyback. Twitter did not have great earnings, and it actually rallied after it. And now we're looking to see, does it break? And let's actually go to the chart because we saw the same thing happen in Penn. We have this longer term move to the downside. Let me actually get these guys off of here. So we have this longer term move where we finally broke this. And now, again, hopefully you've been watching this with us every day. We're in this box right now. So there's the bottom part of the box, which is where it traded to the new low prior to it breaking the trend here. So the big thing with Twitter now is we're stuck in this box right now, but we have the specter of that big stock buyback that they talked about. And now we're going to pay attention is, can it break out of this box and carry up despite the fact that the earnings were not really what was expected? So it's kind of cool now. Again, the same thing with the bigger picture of the market. You have these catalysts in the market, the long-term earnings and the cash flow versus the stock buyback. Stock buybacks are pretty interesting things to keep an eye on, because I think one of the easiest way for us to really wrap our head around this and have a good conversation about it is, why did the stock market go up for 18 months after the pandemic? Sure, it hit all-time low, not all-time lows. It got crushed when the pandemic happened, but then quantitative easing came in and we're going like this month. But here's the thing. The market eventually rallied back to pre-pandemic levels. So if we go out on the weekly chart here and we bring in where we were. So right here, right prior to this, the market kind of could have just stopped right there, right? If you put it there, you're like, okay, big hit, got all the way back, and now kind of back to where normal is, right? And you're like, okay, let's stop quantitative easing because, we accomplished our goal. The market crashed, the economy crashed, we got back, and basically, 6 months later, we're back there. And that's kind of what everybody expected, right? You expected that we took a hit, came back. All right, the reason we put that Band-Aid on there, it worked. We stopped the bleeding and we're back. But quantitative easing did not end. That bid was still under the market. So actually, if everybody could type in, if you have any other stocks that announced buybacks, that would actually be pretty cool. So that bid was there. So what I'm challenging you to do now, what I'm opening up as ideas to you, is what other ways can you as a trader define reasons that a stock should rally? So obviously we're in hot and heavy in earnings seasons right now, and there's plenty of stocks to be looking to buy. There were a few stocks that reported recently. There was one that reported yesterday that got absolutely clobbered. They actually announced on Twitter prior to the market closing, which is very, very unusual. Obviously, we're talking about AFRM yesterday. So what I want you to do is, if you want to really start to raise your game as a trader, and I didn't say as a chart reader, remember on this channel, what we do all the time, we're separating. You did not open a trading account to be a better chart reader. Please remember that. You opened up a trading account to make money. You opened up a trading account because you want to be a better trader. Chart reading is a part of it. That's order flow and tape reading and assessing what's going on. But the part between entry and exit, between buying the stock and selling the stock, that's where the magic happens. And hopefully on these calls, we're giving you a lot of good ideas to understand that the conviction level that you should have when you're looking to buy stocks is prior to what happens between entry and exit. But during it, in between there, that's where the money's made. So go back to what we said before about the type of profit we're going after right now. So the entry signals are the same, but the type of exit that we're looking at, the type of profit targets, the objective has changed a little bit now, simply because the market's a little bit less obvious. So we're trading for a little bit more momentum trades on the long side. We're looking to hedge ideas on the short side. So now we're going to go through a bunch of ideas that I have in my game plan. I just gave you that entire list. So hopefully you took a snapshot of it. So we're going to look at stocks on the long side of the market as buying opportunities, and we're going to look at stocks that I'm looking to short sell, looking for markets to go down. So again, if you don't understand short selling, that's perfectly okay. It can be a confusing context. But if you want to learn a little bit more hedging, like I said, there's a link in the description below this video. You can watch that after we're done with this video. Oh, by the way, if you're getting some value out of these videos, it would mean the world to me if you could hit subscribe so you get updates, and smash that like button, because it lets me know, the more thumbs up we get, it lets me know that we're providing value and that you really like this kind of content. So we're going to head over to the charts. We're going to take a look at some ideas. The market right now is neutral at best to slightly bearish for me right now. Now, some of the energy stocks, which we spent a lot of time on, have rallied and pulled back. So we're looking at a couple of those. The basic material stocks that we've been talking about have been super strong recently. We have a couple of stocks on the industrial side of things that we're looking to sell short. I just showed you one of them. 3M was one of them. Caterpillar has had a bunch of days in a row. If I'm not mistaken, like 10 days in a row. Boeing, Caterpillar, Boeing. I'll take a look at that. Where in the industrial area that they're just constantly closing above the opening price, which, if I'm not mistaken, it was like 10 days in a row of green candlesticks. So what does that mean? That means that the bid, they're holding the bid. So now we have that language. They're holding the bid there and they're not letting it go down. So there's buying underneath those stocks. All right. So let's take a look at some of those ideas right now. We're going to work our way over to the charts, and we're going to actually zoom out a little bit. So again, it's Friday. I just came back from a mastermind for 2 days. So we're going to share everything today. So make sure you take a screenshot of this. So again, these are ideas that are in my game plan. It doesn't mean I'm trading every one of those stocks. I have to wait for the probabilities on these stocks to unfold after the market opens, and then I make decisions. But this is the list of stocks that's in my game plan on the long side and the short side, and potential stocks for me to be buying today. So here's the list. Take a snapshot of it. Okay, so you can take a snapshot of that. And now we're going to actually go over some of those ideas right now. So American Express is one of the first ones that I'm looking at. You can see the XLF, which is the financial ETF, continues to hover up at this level. But American Express, again, we're going to take a look at a couple of financial stocks, actually rallied pretty hard and got through this level. If you remember last week or early in the week, 187 was the level we've been watching. And again, I want to give a little bit of a lesson here, a super quick lesson on order flow and what we call well bid. I got some good questions last week about what that means. So order flow means from 1 hour to the next, 1 day to the next, the smart money, the deep pockets, people with massive teams of research that can move the market. They're the reason stocks go up and down. They start buying stocks. And it's our job to pay attention. Have they done it for an hour? Have they done it for a day? Have they done it for 2 days? The more time that they've committed capital, the deeper their commitment to that idea. So it's our job to find those ideas and then piggyback on those ideas. And that's where we get to the optimal entry and risk reversal and that kind of stuff. Okay. So we looked at American Express. Now we're going to take that out a little bit further. And you can see pretty clearly here now it's 1, 2, 3 weeks of buying. So there's been some money committed to that. So this is one of the stocks that's on my watch list today. And it actually paused pretty cleanly today. Okay. CVS, which actually had a bearish gap yesterday, but it's still actually pretty strong. I'm looking for this stock to actually trade back above 106. So now think about what I just said. Strong over the last couple of months, gap down, not great news. I'm waiting for this to trade back over 106, and then I'm going to consider buying it. So remember, everything we talk about here is if this happens, then I plan to do this. If there's bullish order flow, then I'll look at it. If it trades up to a certain level, then I'm going to look to buy it. CVS, the healthcare store, I'm looking for it to get back above 106 before I trade it. Working our way over into Alcoa and NUE. Now, the challenge here, especially with NUE, and we talked about this on our game plan video last night, which I put out every day, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times it's got up to this 122 level, and you can see it got smacked down again. Very similar to what we saw in Starbucks here at this 117 level, right? So we know that 122 is a challenging trade. Now, this is where a lot of traders get into trouble. Like, oh my gosh, look at the percentage gain on that thing. I have to get involved now. You have to get involved where you believe the odds of follow through are the greatest, which is why we choose to accept risk. Remember, the only reason we choose to accept risk is because there's a pretty good chance of a stock moving in our favor. So what's kind of interesting about NUE right now is it got up to that level and got smashed again. Sold, and it's down $2.50 again now. So now we know that 122 is the alert that I'm setting for NUE. Getting into some other ideas. Again, let me pull that up for you right now. I'm going to put this on the screen again for you just so you can take a snapshot again, because I want everybody to have some ideas for today that are pretty good. Okay. So NUE was the last one. So other ideas on the long side, BX. Now, BX actually broke this bearish order flow here for a while here and kind of moved up pretty violently. But what I like about this one right now is the fact that it pushed up. The market's kind of in chaos and it's holding the bid. So Wednesday held the bid. Thursday held the bid on a day that the market got hit pretty hard. So I'm actually looking, and again, we could zoom this out here as well. You don't need to make things complicated when you need to find significant reference points. So right now, the trade for me in BX is between 134 and 148. That's the next trade that I'm looking at over there. Some other ones that are actually pretty interesting. We talked about this one. Now, this is where you start to, the quote that I use in the community is you start to read the big song versus you read the notes. Now, we're starting to read the notes a little bit here now on Boeing and starting to put the pieces together a little bit here. This is kind of cool. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days in a row. Now, you can make the argument that the order flow is as neutral as possible, and you'd be right. Like, we're kind of stuck in the middle of this, but you can't ignore this. We had a bullish U-turn after earnings, and 10 days in a row, the stock has closed above the open. The market is actually down. It's actually set to open positive. So, Boeing trade right now, we do not have longer-term order flow. We have recent solid tape reading that is showing us that somebody is buying it right now and holding the bid based on the fact that it closed above the open 10 days in a row. Now we move the argument out a little bit further on the weekly chart and see how long that's been happening. And this is where we get kind of cool. So now we have 2 weeks of buying. So 10 days of buying. And we just saw that. So what kind of trade would I be looking for in Boeing today based on all of that buying? Well, this level right here is where it keeps failing. And right now we're at let's say 219. So I'm only looking for a trade between 219 and 229. Now, remember, order flow. The more obvious the order flow, the more conviction I'll have, the more share size I'll have, the longer I'll hold. We do not have great order flow, but we have 2 weeks of buying. So somebody's stepping up in Boeing right now. So I'm going to look to build a position over this $11 window. Remember, very beginning of this call, we said I'm trading for cash flow. I'm not looking for those bigger moves. So I'm only trading the last 10 days of Boeing up to that next level. So remember, if this happens, then this happens. So if Boeing and the rest of the market trade lower today, but especially Boeing, if I would look to buy Boeing today and it starts to trade higher, I will look to buy it and look to work that trade up to the next level, which we said is 229. If Boeing opens lower, then I will do nothing. I have to say that because you'd be shocked at how much feedback I get when you say, Pete, you said you were buying Boeing today. I didn't say no matter what. I'm trying to teach you that you need to be open to, if this happens, then I plan to do this. If this does not happen, then I do nothing. It's that then I do nothing part that a lot of people get messed up on. They take action when they didn't plan to. So I'm trying to help you right now as kind of like a mentor, that if what you're looking for doesn't unfold, be smart and be in cash. That's the better trade to make if it doesn't work the way you want it to. So that's the outline that we're looking for in the Boeing trade right now. I have a couple of ideas that I'm looking at are stronger stocks that I'm looking for this bullish order flow to reestablish itself. And you can actually see it's slightly positive here. So we had this big fast move, and then we had to actually readjust with a new move. And ironically, yesterday, after 3 days of selling, came right back to this level. So I'm actually looking for Exxon and CVX to find a bid. CVX to find a bid here today as well. This is actually a pretty clean pause up here. It's actually up almost $1 here as well. A couple of other stocks that actually have had some pretty good order flow. CF, you can see it's actually at this breakout level again. We're sticking in that area. Airbnb has had some recent bullish order flow, but again, we need to be getting back above this level. One that, if you remember, we called out last week, PM at 104 was a big level. And you can see we're actually up above 105. And that's actually a big thing too. So hopefully you're with us every day when we're calling these out. We called out PM earlier in the week and we said 104 was the level. So hopefully you were, remember we say there's a different trading game plan and a tracking journal. Trading game plan or stocks you plan to trade today. Tracking journal, you're setting an alert for, and if it trades up to that level, that's when you get in. PM hit the alert, and over 104 was the level. Very similar to what we're talking about in Morgan Stanley over here. So 106 is the level that we've had since October, I believe it was. Yeah, September, October. And now we actually finally punched through this level, and we're still above that level. So I'm looking to start building a position in Morgan Stanley. Now, if you understand short selling, if you understand selling short up here and stocks going down, I'm going to walk through a couple of ideas on the short side that if the market opens lower and the stocks trade down, short selling them is borrowing stock from your broker dealer here to short sell. So you're selling something you don't own. And if it goes down, you're going to buy it. It's the same scenario as if you buy a put option where you're looking for it to go down. In this case here, we're short selling it and then we're buying that stock back lower. So obviously AFRM took a big hit yesterday after hours and it's continuing to trade down. It's actually down another 10%. And actually you can see this was the level that we were watching. It broke this trend and just got walloped yesterday. So AFRM on the short side of things, PayPal, which just continues to grind lower. I don't see any reason to do anything other than think that's going to continue. AEM and 3M, as we just said before. So those are the lists of ideas that we're watching today. So again, I just flashed that on the screen for you a couple of times. If you missed it, you can watch the replay. The replay is available immediately. There's a lot going on in the market right now. So I just want to take you back to what we talked about at the beginning of the call. If you're finding the stock market right now challenging, if you feel like your head is spinning and you just can't get a grip on it, in this kind of market, especially for active traders, raise your hand right now if you're buying the high and selling the low and you feel like just do opposite what I do right now because I can't figure anything out. That's the kind of market we're in right now. So keep your sanity, have confidence in yourself, and take a step back and say, what am I not seeing? And hopefully on these kind of calls, this is where we can walk you through. Maybe it's not you. Maybe it's the type of market we're in. We're in stop and go traffic and we shouldn't be stepping on the gas, which means when we find those A-plus trades, like I gave you a whole bunch of the ones I'm looking at today, you are trading with conviction, but not necessarily looking for the big home run, bigger trade. We're more trading in cash flow mode right now and trading both sides of the market. So if you didn't catch that hedging video, click the link below in the description. You can watch that hedging video, watch the replay of this, go back a little bit and get the whole list of the ideas that I'm looking at today. And keep the faith. This is a challenging market, even for experienced traders right now. This is a tough market. If you happen to be watching on YouTube and anybody's telling you that they're killing it and it's easy, they're full of beans. I'm telling you right now, this is a tough market. Right now, you should be in capital preservation mode. You should be in keeping your sanity mode. You should be keeping your confidence mode. When and if, which it's when really, when the market finally gets out of this little back and forth type price action, the road will open up and we'll have a few more ideas that we can trade with a little bit more conviction. But right now we're more in cash flow mode. Okay. So have an awesome day, everybody. Thank you for joining me today. I really appreciate it. If you enjoy what we do here today, please do me a favor, hit that subscribe button, smash that thumbs up button, and make sure you watch that hedging video, which is in the description below. Have a great day, everybody. I'll speak to you soon.